Amongst the listed space, one of the companies that would be right in the thick of things when it comes to REITs is DLF. So let's get in Ashok Tyagi, Group CFO of DLF, to talk about that and more. Good having you, Mr. Tyagi. Thanks so much for joining in. Give us more details of the proposed CMBS firstly, and what's the level of interests and the savings that will have on the company.
So, we are in the final stages of hopefully getting our ratings, etc. What are the pre-issuance stuff done for the CMBSs, and we are clearly looking at hopefully, maybe a 200 basis points interest reduction.
Mr. Tyagi, now let's shift to the main topic. All the news over the weekend. The finance minister indicating that MAT exemptions are now going to be applicable to REITs as well, although partially. How do you see this move benefiting DLF?
So the finance minister has now announced that the swap of shares in SPV with units of the REITs would not be subject to MAT at the hands of the sponsor in the initial phase, which I think removes one of the biggest entry barriers to floating of REITs. This coupled with the capital gains exemption that he had announced at the time of the budget speech, I think are two extremely important steps, and clearly I think make the REITs a far more viable and feasible proposition going forward.
DLF's plans to go ahead with REITs, and you probably have some presence out there already in a way, but when can we expect the REITs from DLF side to get listed?
As we had also mentioned, when we were announcing our third quarter results, that we were clearly looking at removal of a couple of these taxation issues which have now been resolved satisfactorily. And so we are clearly, now in the process of preparing ourselves internally, in terms of whatever needs to be done and hoping that we should be able to get our first REITs in the market, in the medium term, preferably within this fiscal itself, subject to obviously all statutory approvals.
Give us more details then on the commercial portfolio of the company. How's that looking right now?
So overall, our commercial portfolio is basically divided into three subgroups. One is the entire offices, B is the IT SEZs and IT parks, and C are the retail malls. And clearly, each of these, we will be evaluating which portfolio sort of, comes to from a rating standpoint the first. So that's an exercise that we are in the process of initiating internally, and hopefully, in the coming few months, we should be reasonably clear of what we bring to the market from a REIT standpoint first.
Okay, so give us a sense of the commercial side of the business. What's the growth plan that you envisage in that sphere?
So our commercial growth has been pretty decent. We have been adding to the net leasing volume by between 1.5 to 2 million square feet a year, and we expect that pace to continue. We are also, in the process of or very close to commissioning our new mall in Noida, which we believe will be possibly the biggest mall in India once it goes on stream. So, and we have a set of further assets, which need to be developed and monetized in future lined up. So clearly, our line of sight to commercial assets was already very strong. And with the REITing environment, there and the policy framework that exists now, hopefully it will only go stronger.
And what's the kind of fund infusion do you see with the REITs listing, and can funds then be used for debt reduction?
So, the funds are always, a fungible commodity, but clearly a large chunk of it would be used for reduction of the debt of the rental company, for sure. And some of it, I presume, will also go into fresh development. So that's what it will be.
Mr. Tyagi, how's the on-ground situation currently with respect to business generally? And are you seeing a pickup, or are you seeing increased traction in business currently?
So the commercial leasing, as I mentioned, continues at a decent pace. The residential portfolio, the sales continue to be pretty muted, but in certain segments, like on our golf course road, as you mentioned in the past also, we have seen some pretty good traction in the last few months. But overall, if you were to look at all the micro markets put together, I would have to concede that the upturn still hasn't fully materialized.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.